morning. Steve Free in Chicago with the morning grain comments. Well, markets are kind of mixed overnight and really very little change. We've seen a drop in volume recently because of the holidays. CPOT grains are closed tomorrow and only open till noon on Friday. So we'll see if there's any more position squaring or if there's any people want to get out of positions going into the long holiday weekend. The highlights, headlines, basically number one, China. Some people guess that 20% of their GDP is now in lockdown, and that could reduce the demand for energy. It could reduce the demand for grains imports, especially soybeans. The Chinese crush right to date is running 9% behind a year ago. USDA is forecasting a 9% increase. We also note that in February, assuming normal weather, Brazil's soybean export prices are cheaper than U.S. So we have a pretty narrow window here to sell beans, especially to China. And I think most people are looking for our final exports to be below the USDA numbers and the carryouts higher. We're still in this 1450 range in the soybeans, and I doubt if we break out of that. We're watching pretty closely South American weather with some dryness in Argentina and some dryness maybe in southern Brazil. Brazil should see scattered showers and mostly normal weather, and we're hoping that the Argentina weather situation, as far as rainfall is concerned, improves January 1st. Corn market also kind of at the lower end of a trading range, trying to find support from strong cash basis levels, the tight U.S. corn pipeline, especially for feeders and the crushers. And we also note that heavy resistance over the marketplace with potential increase in Ukraine and South American corn exports cutting into our export demand. So eventually we could see a little bit higher corn carryout here in the U.S., which could break out on the downside of this trading range that we've established since August. In the wheat market, again, we're not seeing the export demand in the U.S. That tends to offer support in the market. Kansas City wheat is supported by dryness in the southern plains, but again, we'll see how that affects the stands. And more importantly, as they come out of dormancy in 2023, will there be rainfall to help overall conditions? We are losing export share in the wheat to lower Russian prices. Markets, I think, already factored in dryness in Argentina, lower quality in the Australia, and the fact that Europe continues to export wheat. So all in all, bottom line, I think as we're in a choppy, quiet holiday trade, the wheat and corn near the support levels, while beans is trading in the midpoint of a trading range. As always, these are my thoughts, not those of ADM Investor Services. Have a good trading day, and everybody have a good holiday.